Hi, I'm Katrina Doran, the Chief Commercial Officer at Illion, and I'm joined today by Steve Brown, our Head of Client Engagement for the banking and financial services sector. We wanted to take a moment to have a quick chat to look at what are the macroeconomic factors we're seeing today in the media, what do we see in the data at Illion, and what are our clients saying? And all of that through a lens of so what does that mean for you and your business, and now what are the options that we have to uncover that hidden risk, mitigate it, remove it, or manage it? Steve, lots in the media at the moment and lots of data that we've seen. Interest rate rises, rent at 10.2%, energy price surges, inflation, wage pressure, the works, all of which is giving a really clear view of pressure on everyday Australians on consumer spending and what they're doing, manifesting in lots of changes in behaviour. 19.5 billion in refinancing in November, massive increases on the previous year. Here at Illion, we're starting to see a slowdown in inquiries in both auto and home, which is suggesting people are either delaying those larger decisions or thinking about what they want to do more, maybe they can't afford it. Additionally, over the last 6 months, we're starting to see a little creep up in personal loans, not the subprime, the normal personal loans, which is suggesting that they're potentially doing other decisions on lower value activities or could be supplementing some of their cash deficiencies with personal loans. As you talk to our clients, how are you seeing these pressures manifesting at a client level?
Yeah, there's probably three common themes that keep coming out, and they are affordability, so the ability to access income and expense information and make an assessment of that quite quickly. The second is proactive portfolio management, so not just assessing risk on the way in from an applicant, but also the ongoing risk that the applicant poses to that business. And then finally, in a hyper-competitive market, it's the ability for a lender to provide time to yes, or critically time to cash as quickly as possible so that they are maintaining or growing their own market share under the realm of responsible lending.
Okay, so what we're saying is there's more pressure from credit lenders, whether that's at a large scale or even I suppose at smaller scale for people providing accounts, to not only be competitive and maintain their revenue and their growth, but also ensuring that they're making the right decision to the right person and keeping their risk managed. So how are you seeing this manifest from an actual in-client view?
Yeah, so from a serviceability point of view or affordability, it really is trying to determine the income and expense status of the applicant. And so getting access to that information is so important. So the ability to accurately and quickly ingest income and expense verification data is so important. It's also the use of that information. So what do you do with a whole range of income and expense data? Well, critically, you need to categorize it. So again, the ability to robustly analyze that information and generate a strong analysis is so important. Additionally, the ability to score that information to make the time to a decision as fast as possible, again in this hyper-competitive market, is so important. So using a transaction risk score is a great way of doing that. Secondly, it's proactive portfolio management. So the ability to ingest a whole range of data sets and manage that on a regular basis. So not just quarterly or even monthly, but as frequently as possible to ensure that any hardship trends or individual accounts are identified quickly and actioned appropriately. And finally, importantly, in a hyper-competitive market, it's the ability to provide excellent customer service and that time to yes or time to cash as quickly as possible. So arranging both the software and the data in a really smart order so that the risk is well managed under responsible lending, but also the client experience is solid as possible. The market is so used to a fast digital loan response now that it's putting a lot of pressure back on the lenders to be generating that determination as quickly as possible.
And I suppose if we think of it with a broader lens, that's really important in any business. That human lens of fitting in with the affordability, how do we make sure that not only can they afford it, but if they do get into hardship, how can we support them in getting out of that? And Steve, I presume that because a lot of what you spoke about was very consumer centric, I presume that the same challenges happen at a business to business lens. Obviously, a lot of businesses who are B2C directly are going to feel the pinch of that reduction in consumer spending as they tighten their belts, that reduction in consumer savings. What are the additional data points that a B2B business might be looking for?
Yeah, you're right. There's a lot of similarities between B2C and B2B, but to your point, the additional data sets are really important. So not just using your own proprietary data sets, but looking at third parties, particularly data around risk of late payment for a business and then potentially risk of failure. Really strong insights come from those additional data sets to align with your own to make a much smarter decision around, again, where your own business partners are sitting from a risk point of view, looking at trends or individual accounts and really leaning into those situations to be as proactive as possible.
Well, thank you, Steve. I think what I've heard here is that 2023 is still going to be a year with lots of uncertainty. The best way to get ahead is to get more certainty, which is to better understand your own data, make sure you've got some good tools and systems and processes to understand the customer base and whether or not their profile has changed. Look at additional data sets and look at making sure that you get additional views that maybe your own data doesn't share, so you can have a more proactive approach to managing your customer base. And on top of that, I'm hearing, let's get smarter, not harder, with technology and process and partnering with the right people so that you can make smarter decisions to ensure you're successful in 2023. Well, thanks for joining me today, Steve, and I look forward to the next session where we find out what's happening midway through 2023.